Stocks on Wall Street on Friday, shortened trading session higher with Nasdaq up 150 points. Dow Jones gains 290 points. Asian markets start the month with a mixed open as investors focus on China's manufacturing data. The gift Nifty is indicating a gap upside for the Indian markets. Crude prices rise more than 1% after OPEC Plus decides against earlier planned production rises in the first quarter of next year. Gold too heads for the fourth monthly gain. The winter session of the Parliament begins today. The government is set to introduce two bills, the Central Excise Amendment Bill and the Health Security National Security Cess Bill that will replace GST compensation cess with higher excise duty on tobacco and new security cess on pan masala. Sources tell CNBC TV18 that the proposed cess will be imposed on the production capacity of the manufacturers and will include an assessment of machines, processes and all aspects linked to production rather than the output. Auto sales for the month of November to trickle in today. Overall volume momentum is expected to be positive. Key surprises in channel checks has been pick up in demand for commercial vehicles. Finance and real estate growth of over 10% and manufacturing growth of over 9% lifts the GDP numbers in Q2. Government's chief economic advisor expects full-year growth at 7% or higher compared to the earlier projection of around 6.5%. Hello, good morning. You've tuned into Power Breakfast on CNBC TV18. I'm Vinny Motiwala and thank you so much, as always, for tuning in. A lot of cues that have come in from the global market front. And look at the cues that we're seeing right now from the Asian market front. How is the Asian market open? Mixed opening is what we're seeing on the 1st of December. Taiwan index is trading with cuts of almost 0.3%. We've seen Hang Seng that is managing to hold on to strong gains of almost 0.7 to 0.8% in today's trading session. Now, obviously, we're seeing Tokyo inflation data that has come in that is a bit hotter than one was expecting. Indian markets obviously will be reacting to that Indian fiscal Q2 GDP data that came in as well. And other than that, Kospi, that's trading with mild cuts. Nikkei is trading with cuts of almost 1.4% as well. ASX 200, 0.3% of cut over there. What is the Indian market indicating? What is the Nifty implied open indicating for us? A gap up start, 129-point uptick. But is this going to sustain by the time we open or where the markets are going to be headed? That is something that we'll be keeping an eye on. As of now, Nifty implied open indicating almost a 130-point uptick there. But like I said, there's a lot of global market action that has come in for you all as well. And we have an exciting week coming in as well with a lot of cues there as well. So to set you up for trade, tell you which are the important stocks to watch out for, as well as cues in the world of F&O, we have our team of research joining in with us. First up, let's go across to Hormas to set us up for today's trade and what are the important cues that we should be keeping an eye out on. Good morning, Hormas.
Good morning, Vinny. And after going into snooze mode after hitting record highs last week, the entire first week of December promises to be a very action-packed one. You take a look at the things that are happening in the first week of December. We have auto sales coming out today and tomorrow. We have the winter session of Parliament kick-starting today. We have the RBI policy decision on Friday that will culminate the week, and that becomes an all-important one, particularly after the GDP print that we have seen from Friday. We have the HUL demerger effective date from today, the record date on Friday, so that also promises to keep the markets in focus as well. Now, the last two sessions, the Nifty has traded in a very narrow range. It's just been 140 points from the highs to the lows, although the Nifty Bank, which has been the bigger outperformer, has remained near that mark of 60,000, continuing to make new highs and will continue to remain in focus as well, particularly so ahead of the RBI policy. Now, for levels, you need to, of course, watch out for 26,280 on the Nifty, which is Friday's high, and then, of course, the record high level, which is 26,310. And on the downside, 26,100, 26,150 has emerged as a support over the last two sessions, of course, with the range-bound sessions that we have had. For the Nifty Bank, 59,500 to 59,600 is an important support zone, more so because all through last week, the Nifty Bank has not closed below the 59,500 mark. So that is an important level on the downside. Of course, 60,000 will be the first one on the upside to watch for the banking index. And of course, today the first important reaction is the Q2 GDP print at 8.2% that we came out with. And that is the reason why the GIFT Nifty is up over 130 points despite the Dow futures being 150 down. So that is an important point to watch out for. The broader market breadth has been a point of contention over the last few sessions. That will be important to watch as well, because any recovery in broader market stocks is getting sold into very swiftly. IPO rush returns to Dalal Street. We have 6,500 crore worth of IPOs opening today, this week, majority from Meesho. And of course, watch out for commodity prices. Copper is at record high, silver is at record high. Watch out for oil prices as well. So there is a lot to track, there is a lot to watch out for. But for now, the GIFT Nifty is for sure indicating a gap up start. The bulls would hope that this sustains going into the week.
Absolutely, Urmas. Thank you so much for that. Now, Nifty implied open indicating a 137-point uptick. But let's move on to Upasna, who's here to tell us which are the important stocks that we should be keeping on our radar. Good morning, Upasna.
Good morning, Vilni. Well, let me start with Lenskart Solution first. The company's reported its first quarterly performance post-listing. Now, revenue has seen a growth of about 21% on a YoY basis. Margins stood at 19.7 versus 16.5%. Now, Brigade Enterprises is another stock on our radar. The company has signed a joint development agreement to develop a premium residential project in Hyderabad, and the estimated revenue potential from this project is more than 800 crore is what the company has indicated. Arvind Smart Spaces also in focus. It adds new premium residential high-rise project in Ahmedabad, and the revenue potential from this one is about 400 crores. Quick Heal Technologies, the company has entered into a contract with NFSU Research and Innovation Council for implementation of integrated cyber solution, and contract value is about 64 crore here. NCC also in focus, as company has received additional 3 orders totaling 531 crore during the month of November 2025. Next up is Tejas Networks. The company has received 85 crore under the PLI from Ministry of Communications. JK Tyre is the next one on our radar, as the board fixes December 24th as the record date regarding the merger with Cavendish Industries with the company. VAR Engineer is the next one. The company receives order for the supply of 140 megawatt solar modules. Newland Labs also in focus, as it approves 189 crore new R&D center in Hyderabad. So all in all, we'll be keeping an eye out for all these stocks in our radar today for today's trading session.
Okay, Upasna, thank you so much for that. But let's go across to Sud, who's here to tell us which are the important cues in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So as Harmas told you that after hitting record high, market has gone into snooze mode, and it's not only in the cash market, but even F&O data is indicating the same. Even on Friday, if you see that just selling figure was very small, FIs have sold around 51 crore. They have added long position of around 400 contracts. They have added short positions of around 740 contracts. Longs exposure remains around 19%. So overall, it's looking a very subdued data from F&O front. If you look at the options data, it's indicating that range for Nifty is now from 26,100 to 26,400. That's the reason 26,400 call had seen maximum addition in the open interest, with premium rising to around 27. And in contrary, on the put side, 26,100 has seen the maximum addition in the open interest. So support for Nifty, first support 26,100. If we fail to hold that, next support comes around 20-day moving average, that is 25,900. Resistance, first resistance would be record high of 26,310. If you manage to cross that, next resistance comes around 26,500. Support for Nifty Bank, first support would be 59,000. Next support comes around 58,700, and resistance would be around 60,000. That's the record high. Some of the stocks that might be in focus, 2 stocks that I have selected on the basis of fresh longs, and those are Varun Beverages and Novama, and 2 stocks that are seeing fresh shorts. One is Astral and one is from life insurance pack, that is Max Finance.
Okay, thank you so much for that, Sudarshan. We'll keep an eye out on those stocks in the world of F&O as well. But let's move on and talk about India's second quarter GDP that came in at a stunning 8.2%, way higher than CNBC TV18's poll of 7.4%. Manufacturing and service both poised above 9% growth in Q2. However, nominal GDP grew at a modest 8.7%, still higher than our poll. Lata is here now to take us through these numbers. Lata, good morning.
Well, it is an all-round good number. 8.2% in Q2 with a 7.8 in Q1 means that first half the economy has grown at 8%, which is one of those very rare years for us. As you pointed out, manufacturing and services, two large elements. Services is like, nearly 60%. Both of them have grown by 9%, and within services, financial services have grown by 10.2%. Public administration, defense, other services like health and education, that's clubbed into one. That's also grown by a very good 9.7%. You can also look at GDP not just from output, but from the demand side. From how people spend, what you call the expenditure side. Private final consumption expenditure, which everyone wants to grow, that's grown by 7.9, capital formation by 7.3. So whether it's consumption or investment, both have done well, above 7%. And this has led most economists to increase their forecast for the full year. As you can see on your screen, SBI has taken the, now the current tally to 7.8. They were much lower. Kotak Mahindra Bank was at 6.6. They have raised now the full year forecast to 7.8, ICRA to 7.5. Generally everyone has raised it well above the 7% mark, not just above the 7% mark. But there are some worries within these numbers. The first one is that the nominal GDP is only at 8.7%. Chances are that in the current quarter it might fall to 8 or even below 8. And this is what is reflected in corporate earnings. So when you have a low nominal GDP, it tends to pressure other things like fiscal deficit and earnings in particular. So investors could be worried. The ultra-low deflator, you actually count some of the elements of the GDP in current prices and bring it down by the inflation. With health and education, the ministry has a problem bringing it down, so that they have deflated the GDP by 0.5%. There are lots of economists who believe that this is too low, and therefore the real GDP is probably gotten exaggerated. But the biggest worry that the GDP number throws up will be for the Reserve Bank. The Reserve Bank had said that a 0.25% inflation number in October has given us space to support growth. But does a growth of 8.2 deserve support at all? That has put, the bond market saw yields rise when the GDP number was announced. Now the street is deeply divided on whether the Reserve Bank will give a cut at all. So that's the worry for the Reserve Bank. Why cut when growth is good?
Absolutely. We'll keep an eye out on the word coming in from the Reserve Bank later this week as well. But let's move on. And the winter session of the Parliament begins today. A total of 13 bills are listed to be taken up in this session, which includes Insurance Law Amendment Bill. There's Jan Vishwas Amendment Bill, Insolvency and Bankruptcy Code Amendment Bill, Atomic Energy Bill, the Corporate Law Amendment Bill, to name a few. But the key to watch is the Central Excise Amendment Bill, as well as the Health Security, National Security Cess Bill 2025. These are the two likely to replace the GST compensation cess with higher excise duty on tobacco and the new security cess on pan masala. These bills signal a major shift in the way taxes, are levied on sin goods. Now, sources say that the proposed cess will be imposed on the production capacity of manufacturers. Let's go across to Timsy to give us more details on this front.
Well, that's right. Finance Minister is set to introduce a health security, national security cess bill in the Parliament. And this particular bill aims to get in these two cesses in place of the compensation cess on these three tobacco items, that is cigarette, pan masala and gutka. And sources say the cess will be on the production capacity, including machines, processes and all the aspects in the production of these three items. For example, if a machine that makes 100 cigarettes per day and is run 3 times a day, then the tax on these three, on the cigarettes, will be 300 cigarettes per day and not on 100. And the cess will be replacing the existing quantum of the compensation cess, which varies from 5% to 90% on these three items. And currently the GST quantum is 28%. So post this passage of this bill and once this levy comes into play, the GST on these three items will be 40%, and the remaining gap, keeping the tax incidence same, will be of health and national security cess. The collections of these two cesses will be with the central government only. It will not be distributed with the states. And also, say for example, the idea is keeping the tax incidence same, For example, a particular cigarette attracts 28% plus 290% of cess. Then the post these two cesses, it will be 40% plus 278%, keeping the tax incidence at 318% only. Now, when it comes to what will be the rules, how will the manufacturers assure that the entire calculation is in line with the proposed bill? Well, yes, those detailed rules will be laid out only after passage of the bill so that there's a smooth transition from the current scenario of GST plus compensation cess to GST plus health and security cess very soon. Let's see what happens finally once the bill is tabled.
Thanks so much for that, MC. But on that note, we're going to switch into a very short break. In the next segment, we'll get you the updates from the White House in our special segment, Trump Watch. Welcome back to Power Breakfast on CNBC TV18. And in the U.S. market, Wall Street ended Friday's shortened trading session higher, with the Dow adding 290 points, while S&P 500 gained a little more than 0.5%. The tech-heavy Nasdaq adds 150 even as it records a losing month. We have CNBC's Seema Modi, who's getting us a wrap on what happened on Wall Street.
Markets rose on Friday's shortened trading day to end November on a positive note as a pullback in tech stocks weighed on the major averages for the month. The Dow rose 289 points, S&P 500 was up 36, tech-heavy Nasdaq gained 151. Now, one of the largest derivatives exchanges went dark on Friday because of a broken cooling system. The outage brought futures trading to a standstill at the Chicago Mercantile Exchange for more than 10 hours. It was one of the longest outages in years. The SEC says it is aware of the outage and is monitoring the situation. And the holiday shopping season is in full swing as retailers kick off a long weekend of deals and discounts. Friday was once considered one of the biggest of the year for in-person shopping, but data shows in-person foot traffic has been mostly flat over the last few years as more people head online looking for bargains. Deloitte predicts the average consumer will shell out $622 between Thanksgiving and Cyber Monday, which marks a 4% decrease from last year. However, Adobe Analytics, which tracks visits to U.S. retail websites, said consumers spent a record $6.4 billion online this Thanksgiving, an increase of more than 5%. The increase, Adobe says, was partially brought on by steeper discounts than expected. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. We're now getting you the latest on Trump-related developments in our special segment, Trump Watch. Now, let's begin with the top headlines. U.S. President Donald Trump credits tariff for making America rich, strong, powerful and safe, driving record stock highs, 401k gains, as well as lower inflation and secure borders. He flips the script on a nation's long tariffing U.S. goods, now holding leverage while halting wars and restoring global respect. Now, markets rally on revenue projections, topping trillions over a decade, though when you look at it, growth risk that looms from a retaliation. Trump warns that evil American-hating forces challenge his tariffs at Supreme Court, urging the prayers for justice, wisdom amid executive action lawsuit. Moving on and taking the update further, the president also on the Ukraine and Russia talks and negotiations that are going there. He said that Ukraine negotiations are going along well after 4 hours of productive U.S.-Ukraine talks in Florida, with the U.S. Secretary Marco Rubio noting more work ahead before the Moscow envoy meets with Putin. Listen in to what they had to say.
Well, they're going along, and they're going along well. We want to stop people from being killed. Doesn't have much to do with us, but I'd like to see if we could save a lot of souls. A lot of people are being killed. Last month, we had 27,000 people killed in that ridiculous war that should have never happened. It would have never happened if I were president.
It's about also the terms that set up Ukraine for long-term prosperity. I thought we started laying the groundwork for that, most certainly in Geneva. I think we continued that work in our communications throughout the week. I think we built on that again today, but there's more work to be done. This is delicate, it's complicated.
Now, moving on, Donald Trump defends indefinite asylum pause with no time limit, targeting unfriendly nations, this came in after the DC guard shooting took place last week, outlining reverse migrations, freezing third world inflows and Biden rollbacks. Now, speaking to reporters aboard the Air Force One, Trump made it clear that the freeze on asylum processing would remain in place indefinitely. He said that we don't want those people. We have enough problems, and underscoring the administration's shift towards extreme restrictions. When pressed to clarify his remarks about those people, the president responded, the people from different countries that are not friendly to the US and countries that are out of control themselves. Listen in.
Let me just tell you something. We don't want those people. Does that make sense? You know why we don't want them? Because many have been no good and they shouldn't be in our country.
What do you mean by those people?
The people from different countries that are not friendly to us and countries that are out of control themselves. Countries like Somalia that have virtually no government, no military, no police. All they do is go around killing each other. Then they come into our country and tell us how to run our country. We don't want them.
Also, in more updates, President Trump directed airlines to treat Venezuelan airspace as closed, deploying major U.S. military assets against the regional drug trafficking. This escalates the hemispheric security. Meanwhile, commodities are something that everyone will be keeping an eye out on in terms of all these changes that he's announced as well. So that is the latest update that we have on Trump Watch in today's segment. But on that note, we're going to slip into a very short break and we'll come back and talk about commodities on the other side. So stay tuned for that. Welcome back to Power Breakfast on CNBC TV18. Today is 1st of December, and 1st of every month, we get our auto sales numbers. Let's go across to Sudarshan now, who's here to tell us November auto sales number. What are we expecting? Sudarshan, over to you again.
It's expected to be another strong month for auto companies as far as sales are concerned. And one segment that is going to surprise very positively is the commercial vehicle segment. As far as passenger vehicles and two-wheeler vehicles are concerned, for two-wheelers especially, number of marriage dates in November 2025 has been much more than November 2024, and that is likely to aid the growth. And considering all these factors, passenger vehicle segment is expected to see a growth of 21%, two-wheelers 15%, and commercial vehicle as high as 20%. Now talking about the expectations company-wise, in two-wheeler segment, one company that is likely to be the underperformer is Bajaj Auto with a growth of 8%, and the biggest outperformers are going to be Hero Moto and Eicher Motors, that is basically Royal Enfield, and these two companies may see a growth of 22% each, and even TVS Motor may see Hero Motor and Royal Enfield may see a growth of 29% each, and TVS Motor may see a growth of 22%. Coming to passenger vehicle segment, one company that is going to outperform is Mahindra & Mahindra, and that may see growth of 22%, and followed by Maruti Suzuki and Tata Motors passenger vehicle, that may see a growth in the range of 16 to 17%. And in commercial vehicle, both Tata Motors commercial vehicle and Ashok Leyland may see a growth in the range of 16 to 17%. And good parties, even December month is expected to be strong for auto companies.
Okay, thank you so much for that, Sudarshan. But let's move on. And in our final update we have in terms of commodities, let's go across to Manisha, who's here to tell us what to watch out for today. Good morning, Manisha.
Morning, Vinny, and thank you for that. I'll start with silver first, and because we've seen strong rally come in for this one. Friday was 5.5% of gains, and today in the morning we are more than a percentage point on the higher side for silver, making it an all-time highs, trading above $57 an ounce. Well, the reason for this is, one, you're looking at an absolute silver squeeze right now with shorts being cut out of the market. The second is a very strong demand coming in from China because the Chinese inventories have dropped to a decade lows, and the Chinese silver export in the meanwhile for the month of October hit an all-time highs. Markets do believe that before this year ends, you could perhaps be looking at $60 an ounce come in for silver prices also. The other thing on my chart is copper, because we're looking at an all-time high on LME, and for the U.S. markets, it's trading at around 4-month highs right now. Well, the planned production cuts by Chinese smelters, series of mine disruptions from major producers are supportive for copper as well.
Okay, thank you so much for that, Manisha. We'll keep an eye out on all those commodities over there. But with that, we're absolutely out of time on this edition of Power Breakfast. Nifty implied open indicating a gap up start for the Indian market. Now 114 points up. When we started the show, it was 137 points up. So we'll be keeping an eye out on that. But don't go anywhere. Bazaar Morning Call is up next.